Ah, 25. Where investing has entered an era of unprecedented creativity. Whether it's paying huge sums for digital assets or putting life savings into volatile cryptocurrencies just to see dramatic gains and losses in short periods. The opportunities to lose money are endless. But today, I've got something extra special for you. I've got a trade that's risky, counterintuitive, and yet widely followed. The kind of move that makes investors question everything. And the best part? It's a story that continues to teach lessons in real time, as relevant today as it will be years from now. So instead of jumping straight in, I've broken this down into 3 parts. Boardrooms on Wall Street discovered that if a company invests in Bitcoin on its balance sheet, the stock market often values it at a significant premium. It's the equivalent of going to a garage sale, seeing a valuable asset on the table, and paying double for it. And this all started back in 2020 with MicroStrategy. MicroStrategy was an enterprise software company experiencing declining revenues, a low market profile, and struggling to stand out. But then, in August 2020, CEO Saylor announced that MicroStrategy would be transitioning its cash reserves into Bitcoin. This was one of the most unusual corporate moves in recent history. Historically, companies have held their cash reserves in highly liquid, low-risk securities such as U.S. Treasuries. This approach allowed companies' cash reserves to earn modest returns while remaining low risk. The idea of putting a company's cash reserves into an asset class whose price could fluctuate significantly was unprecedented. And the story only gets more interesting. Towards the end of 2020, Saylor ramped things up. MicroStrategy began raising capital through convertible debt and used that borrowed cash to buy more Bitcoin. Fast forward to 2025. MicroStrategy is fully invested in Bitcoin, and they've achieved a remarkable transformation. MicroStrategy evolved from a struggling software company into a company whose primary value lies in its Bitcoin holdings. MicroStrategy even simplified its name to Strategy, reflecting its new focus. Strategy now holds approximately $70 billion in Bitcoin, with a market capitalization around $138 billion. Since 2020, the stock has gained over 400%, making it one of the best performing stocks of the past several years. And because this strategy has seen notable success, many other companies have followed suit. It doesn't matter if the company was previously in gaming, healthcare, or hospitality. The strategy is simple: announce Bitcoin purchases, and investors often respond positively. Logic in public markets seems to have changed, and investors are paying attention to this new kind of corporate play. The reason is straightforward. Institutional capital, including pension funds, mutual funds, and other asset managers, often seek Bitcoin exposure, but their mandates can restrict direct investment. A fund's mandates define what investments they can and cannot hold. Many funds are not permitted to hold Bitcoin directly. By purchasing Strategy stock, these funds gain indirect exposure to Bitcoin. Strategy provides investors a convenient way to access Bitcoin's potential upside. Looking at Strategy's shareholder list, this becomes clear. Even investors who have expressed skepticism toward Bitcoin are among the largest shareholders. Which brings us to the point. This is a highly unusual corporate scenario. A company whose stock is valued far above the market value of its cash and digital asset holdings. Strategy, essentially a Bitcoin repository, has institutional investors paying significant premiums. These investors are willing to pay extra for the convenience of exposure to Bitcoin through Strategy stock. And here's a key insight. This complex setup could be simplified if mandates allowed direct Bitcoin investment, eliminating the need for premiums and workarounds. It seems Strategy has a clear plan. Step 1, issue convertible debt. Step 2, invest the proceeds in Bitcoin. Step 3, benefit from appreciation in Bitcoin and the company's stock. But the risk remains. Convertible debt carries obligations. When the debt matures, Strategy must either repay the principal in cash or convert bonds into shares. If bonds are converted to shares, heavy dilution can occur, affecting the stock price. The primary risk for Strategy is not the stock price alone. It is whether the company can meet interest and principal payments if Bitcoin's value declines significantly. MicroStrategy currently holds around 600,000 Bitcoins at an average price of $71,000. So here we are, a company that has become a specialized Bitcoin holding entity, and institutional investors are entrusting it to manage billions in convertible debt. This is one of the most remarkable and risky trades in modern corporate finance.